What is going on, ladies and gentlemen? So we got a fun conference today. So the Deutsche Bank Global Auto Industry Conference. I wish I can give you some context, but I have absolutely no clue what is going to be discussed. In theory, it should be starting in roughly around 2 minutes. So I'll mute myself and we'll just listen to Peter what he does have to say. Timeline wise as well, I don't know how long this will take. Normally fireside chats, which is tomorrow's one in the morning, probably around 30 minutes. This one might be similar nature, but we'll just have to wait and see. Hopefully there's some correlation with what 𝗖𝗢𝗡 was announced today. But I do have the ticker at the very bottom of the screen, so you can kind of see if the market likes something, if it doesn't, or whatever else. But yeah, it will be a fun ride nonetheless. Hopefully everyone's having a good day though so far. Good morning, good afternoon, evening, wherever the hell you guys live. But yeah, it's a fun day. I guess for the next minute or so, I'll just give you a quick summary in case you missed it. So this was announced. So 𝗖𝗢𝗡, we are pleased to announce a SAR 8.2 billion partnership with Hyundai to supply advanced electric vehicle drive systems. So this is where I do feel that Lucid is incorporated in that, because in theory it's kind of under the PIF umbrella, and 𝗖𝗢𝗡, as far as I'm aware, doesn't have what is being outlined, right? They don't have any amazing technology yet, unless they're obtaining it through Foxconn, which I don't know. So who knows? This is something that Peter hopefully could talk on, but as far as even an agenda, I have no clue whatsoever what's going to be brought up here. And in case you do not know, they also have this right here. So tomorrow is the Evercore ISI Global Clean Energy and Transition Summit. So this one is a fireside chat. Again, agenda-wise, no idea. Logically, today would be more of an open-ended EV type of topic, and based on the title of this Evercore one, that one could be, I would say, ESS related or something along those lines. Of course, they'll kind of could be extended to Lucid talking on their technology and everything, but in theory, it should be starting any moment. I still hear the
CEO and CTO of the company. As you probably all know, Lucid is a vehicle manufacturer specializing in luxury electric vehicles as well as electric technology, where the company is targeting production of 9,000 units for this year. I think you have delivered similar amounts last year. And you also recently raised $1 billion in financing via a private placement. So the format for today's session will be a presentation by you, Peter, and then after that, we'll jump into a few of our questions. So with all that, thanks for being with us.
Thank you.
Over to you.
Thank you, Emmanuel. Thank you, ladies and gentlemen. With that, I'll dive straight in, because I think there's probably a lack of awareness about what Lucid's about, why we exist, what our mission is, what our ambitions and goals are. So maybe it'd be helpful for me to cover a few of these issues to put our discussion today into an appropriate context. First of all, there's some forward-looking statements, legal stuff. So I'll run through that in milliseconds and get to the meat of my presentation. So we founded Lucid in 2016, and with a clear vision to advance the state of the art of electric vehicles and electric propulsion systems to a whole new level in order to truly accelerate that transition to sustainable mobility. And to that aim, we actually engaged in the Formula E World Championship, supplying all the batteries to that World Championship Motorsport Series in 2018. And then in 2019, with the funding from the Public Investment Fund for Saudi Arabia, we actually started building our factory, the first purpose-built electric vehicle factory in North America. And during COVID, in record time, by summer of 2020, we were already building prototypes. And by late 21, we got the Lucid Air into production, the Motor Trend Car of the Year, our very first shot. This is 2.5 years from securing our funding. This is world record-breaking time. Then we revealed the most incredible performance car on the planet, the Sapphire. We put that into production last year, together with announcing an Aston Martin supplier deal, getting our pure base level version of Air at $69,900 into production. And this year we're preparing for the launch of the Lucid Gravity, which is scheduled for production late this year. Really going to be a landmark seminal product, best SUV on the planet. So with various variations of Lucid Air behind us, we look forward to the big steps which are going to really multiply our market, total addressable market, 6 times with the Gravity SUV program late this year and scheduled for production late 26, the big one. This is going to be our Tesla Model 3, Model Y competitor. This is going to be the platform that we're designing to make 1 million units a year of. This is our mid-size program scheduled for late 26. And so key to this, central to this, as a technology company, we make all the technology in-house, and it's truly world-class. The battery pack, the motor and transmission, the inverter, the Wonderbox charging system, and central to all this is our software. And it's not enough just to make it in-house, design it in-house. We actually make it in-house in a vertically integrated factory in Arizona. And even that's not enough. There's no point in doing any of that if it isn't truly differentiating. And it's got to be differentiated from anything you can buy off the shelf. And it's that technological leadership that we've created by redesigning all this from scratch, making it in-house, taking it to another level that really sets us apart. And I think if you really want to distill what differentiates one EV company from another, it really is efficiency. And what do I mean by that? It means how far can I go with how little battery? Can I go further with less batteries? Because it's not range. Anyone can achieve range. Achieving dumb range is easy. You just stuff zillions of batteries in. And you're seeing that from our competitors now. Massive battery packs. That's not smart. Anyone can do that. It's how far can you go with how little. That's what really differentiates. And why? Because that gives us a profound commercial strategic advantage in the future. With our technology, and this is a chart of the runners and riders of the EV space, and the green bars are the Lucid products. You can see we're not in a position of mere leadership. There's a step change before our products. There's one exception. This is the Sapphire. This is a hypercar. To have a hypercar at this end of the spectrum is extraordinary. We can, with this, because we can go further with less battery, we can endow an electric vehicle with range. How much does it cost to endow a mile of range on an EV? And I'm using Bloomberg's figures, very conservative, $128 per kilowatt hour. I think the real number is more like 150. Even at that rate, we're operating at 27 pence per mile of range, and some of these bad boys this end, it's 58 cents per mile, $58 per mile, sorry. And what does this mean, and why is this so significant? Well, the reason is we're addressing the fundamental obstacle to widespread EV adoption, and that is really the cost of entry. And why is an EV so expensive to make? Because of the contribution of the battery cost to its manufacture. If I look at a relatively high-end EV, we see that a battery cost can represent as much as 37% of the total bill of materials manufacturing that EV. And actually, for a more affordable EV, that battery cost can be over 40%. It's that significant. So when others are looking for saving maybe $130 on a car through a gigacasting, I am going for the jugular. I'm going for thousands of dollars advantage. And let's put that into perspective. We've got a Lucid Air with our technology compared apples for apples with 2 competitors. And we see that if those competitors adopted Lucid's technology, the tech that we have in production today, not something pie in the sky 10 years from now, what we have today, normalized, those competitors would enjoy a cost saving of over $2,000 or up to over $4,000 per car manufactured for the same range. This is getting the same range for significantly less battery cost by using Lucid's technology. That means that we are uniquely positioned in the future to take advantage of that, and that's what makes us, positions us in a very differentiated position financially. Our finances right now are dominated by long-term investments for the future, but do not let that fool you. This will come to bear in the future. This fundamental, profound advantage we've got, whatever the range of the electric car, we can make it with less battery than the competition, and the battery represents a vast proportion of the cost of making that car. So to wrap up, I'd like to make what I think is a real seminal announcement in the history of sustainable transportation. We've been founded and formed as a company, Lucid, to really advance the state of the art, to chase down how many miles per kilowatt hour we can achieve. And today, ladies and gentlemen, I'd like to announce that we have finally achieved a major objective. We've managed to achieve a certified 5 miles per kilowatt hour with one of our products. We're going to give an announcement of that very soon, but the EPA have validated our technology with a product that we have, which is going to achieve this landmark, when others are at 3 miles per kilowatt hour or 4 miles per kilowatt hour at very best. We've managed to crack the 5 miles unit. This is a landmark, and I've said many times, our objective as a company is to get to 6 miles per kilowatt hour, because nothing less than that is going to save the planet. Thank you.
Thanks so much for this overview, Peter. So if we start with the technology side, so one of Lucid's key differentiators is that much of the technology is designed and manufactured in-house. How much of a competitive advantage is it versus other players? But just as importantly, how do you preserve this moat?
It's very significant. It means that whatever journey one takes, even with the Lucid Air Pure that we have today, which achieves 4.74 miles per kilowatt hour, for the user, any journey you take, A to B, if it's from the home to the shops, to your commute to work, on your vacation, you actually use less electricity than the competition. And because there's a need to use less energy, battery size can be smaller, so there's less impact upon minerals and the world's resources. So you're driving the most sustainable car on the planet. And this is quite significant. We have an advantage over some competitors, which is over 50%. And one of those benchmarks I just showed, we can actually go 50% further than the competition with the same battery size. Or you could have 2/3 the battery size to go the same distance. Now, in terms of the gap we have, as you see with the 5 miles per kilowatt hour, the gap is growing. It's not shrinking. The gap between us and the nearest competition is growing. And there's a reason for that, because we've committed as a company, we structured the whole company as an engineering and science-led company. I've got the most brilliant engineers in the world, and we're on a mission to grow this gap. But this is very important for the environment and for the planet, and also gives us a commercial advantage. Nothing that even a patent has a life expectancy. But this is a case of how far can we run, how fast we can run. And this is a tech race. And no one is staying still. And I believe we're running faster than anyone else.
I think in the past, you've indicated openness to monetizing Lucid's technology also through partnerships with other OEMs, licensing or supply agreement. Can you talk about your efforts there and initial indications of interest?
Yeah, well, we announced a landmark deal with Aston Martin last year, worth then at least $450 million, to really provide world-class electric powertrain, their next generation of hypercars for the next decade. And I think it was appropriate that sapphire technology, our top flight technology, powers a top flight supercar brand like Aston. If you look at the tech that we have today in mass production, that would suit a typical luxury car. But it gets really exciting in the future because the tech that we're developing for our mid-size platform really would suit a family car of the future. And so it's little wonder that we've attracted attention from other automakers, and we are in discussion with a number at the moment.
Now, I guess one of Lucid's large challenges is the lack of volume scale so far, which is impacting unit economics. How much of your current losses per vehicle is due to lack of scale versus your bill of material?
It's dominated by volume, actually. If we look at the amortization of the depreciation of our factory, we have a factory which we're currently expanding in Arizona. We'll have a 90,000 per annum capacity at the end of this year, ready for Gravity. But we've announced that we plan to make 9,000 vehicles. So this amortization of depreciation is quite a fact. It's all about scale. But let me tell you, in Q1 we grew our sales 40% year on year with Q1 of 2023. In 23 we grew per annum 37% over 22. The word is spreading, and far more people are adopting Lucid. The word is growing just how wonderful this product is.
So what are the key milestones or as well as challenges that you expect to face in basically reducing production costs and achieving scale and positive gross margin?
Well, it's all about scale. It's all about scale. But we're assiduously chasing costs. We're taking appropriate measures with inventory control and the impairment as a consequence of that. We're nicely bringing down our inventory numbers. We saw that through Q1. We're making steady progress in our inbound logistics. But it is all about scale. And we have 3 steps to achieving scale. Our first step is relentlessly grow our Lucid Air sales. We're working assiduously on that. Second step is to introduce our Gravity SUV with a 6 times addressable market, and that is scheduled for production start later this year. And then the third step, the really big one, going for 30 times TAM with our mid-size product late 26. And that's a product we're targeting about 48 to 50,000.
And the on step 2, which is the Gravity SUV, scheduled for later this year, have you shared any volume goals there?
Well, I'd like to sell as many as I possibly can. We'll have a factory which has got 90,000 capacity. So, and I think we've got a product that really resonates with the American psyche. Everyone I'm speaking to, it's very interesting. A lot of people really loved the Lucid Air when they saw it, but the constant remark I'm getting from people who review the Gravity is, when can I buy it? I want to buy it. So, the sky's the limit.
Yeah.
I want to sell as many as I can.
More broadly, can you provide an update on the demand environment for EVs and for your EVs? Are you seeing the environment strengthen, weaken, stabilize, since, I guess in the last few months?
Well, it's very interesting, the narrative, because we're experiencing the polar opposite. In Q1, we saw a growth of our deliveries, our sales, by 40% year on year. We're outselling Porsche Taycan, Mercedes EQS in North America. We're outselling BMW i7. We're outselling the Audi e-tron GT. We're seeing a growing steady demand for our product as the word spreads. So I think there is a narrative here which may be born of too many people getting bad experiences from EVs, which are subpar. And I think people should take a serious look at a Lucid Air, which is an outstanding product and far superior to gasoline counterparts. and far superior to hybrids, which really compound the worst of both worlds.
Can you share more details on your mid-size vehicle, which is scheduled to start production in late 2026? You talked a little bit about it during the presentation, but what would be the overall competitive landscape in that segment? What volume do you ultimately envision for that product?
So this is the huge project for us. This is the big one. This is really what's going to propel us into a volume player, and we need to be that to have a meaningful impact upon the environment. That is central to our sense of purpose and sense of mission. That's why I'm here. That's why the whole team's here. And central to that is you saw that although a relatively high-end EV, the battery can represent 37% of the BOM cost. When you go down market, then that percentage becomes even more significant. So we have a profound and inherent advantage as a company. This is where we will deploy our technological advantage to full financial effect, because we will be able to make that car with a very competitive range, with a significantly smaller battery pack than anyone else. That gives us a cost advantage on the bill of materials of a midsize. And remember, midsize is a world platform. We can have more than one type of vehicle off that platform. In fact, we're planning. There will be at least 2 variants, different models based upon that common platform, which is being architected as a flexible platform, state of the art, with absolutely embodying all our learnings for cost down, everything that we've accrued from air and gravity. The target price is about $48,000 at today's prices. We've currently started construction of our AMP2 factory in Saudi Arabia. The foundations have been poured for that. That will have a capacity of 150,000 units per annum. And we're also going to bring a model of midsize into our factory in Arizona. So this is very exciting. It really is the big project for us, and it's well underway. My advanced engineering team and design studio teams should be working on it as we speak.
Do you need the volume from this mid-size vehicle to get to the scale that enables you to be profitable?
Certainly, it's a profit enabler. I think that I'm very optimistic with Gravity, because I think Gravity is going to give us sufficient product definition to mitigate risk of cannibalization across from that to air. You've got something which is a true SUV, which is truly differentiated from a Lucid Air. It's much more different than, say, a Tesla Model X is from Model S. Those are more similar car-like products. So I think Gravity is a unique product. In its own right, can it give us that profitability? That is yet to be seen, because that will become volume dependent on that product. But certainly the midsize is the key enabler for scale. And that works in a favorable manner with our purchasing power as well. Because remember, you shouldn't think of the BOM cost as a fixed. BOM cost is itself a variable, which is a function of volume as well, because the suppliers in turn have to amortize their fixed cost against the volume of parts they supply you. So in short, very confident that midsize will give us that, and hopefully we'll get very close with Gravity.
Can you talk to us about Lucid's relationship with the PIF? How much ownership does it have? What is the plan for the new factory in Saudi Arabia?
Yes. Well, the PIF have been wonderful partners. It's really super committed, and we do truly operate in a sense of true partnership. Since we first met and committed to a contract in 2018, right through thick and thin, they've gone pro rata on every funding round until very recently. They own just over 60% of the company. And I think what is really important to recognize here is that the relationship really transcends a mere financial investment. We're interwoven in our ambitions. There is a vision 2030 in Saudi Arabia, for their economy to transition away from fossil fuel dependency. It's a bold vision to a sustainable model. And we are undeniably a cornerstone of implementing that vision. So we are bound by this common sense of purpose and mission and real desire. I mean, we want mid-size out in late 26 as much as the PIF do. We're bound by this desire. They want it as much as I do, because it's going to be a cornerstone of their economy, and it's a cornerstone of the future of Lucid.
In terms of the plans for the factory there, will this be the first place where the midsize will be produced?
To start with, that's the plan, absolutely, yes.
And that will be for global markets?
Global markets, it's a world platform, global car. As I say, I would like Lucid to be making over 1 million cars a year in the early 2030s. I know that sounds a tall order because we only delivered 6,000 last year, but we're on an upward trajectory, and we're on a path to make more affordable, more attainable cars available to more people that are superior. If you look at the work that we're doing on midsize right now, all the attributes, advanced aerodynamics, incredible performance, incredible spaciousness, and yet with real affordability, a great practical car for the family, and with very advanced software and user experience. That's key for these future products, and that's what the world wants: fully connected car, computer on wheels.
Maybe just finally for me, can you talk to us about your cash position and runway? I think currently you have $2.2 billion in cash and cash equivalents. And then, so how do you see, free cash flow over the next few quarters and years? Do you need to raise more capital, and when?
So we announced with our Q1 earnings that we had around $5 billion cash or cash equivalents. And we have enough financial runway to see us well into 2025. But we are a capital-intensive business. There's no question about that. And so I take an entrepreneurial view of raising capital when the time is right. And we've made profound investments. If you look at our plant in Arizona, how much vertical integration that we've embodied there. I was touring there just 2 weeks ago. We've put a big chunk of money into our in-house stamping line. That will reduce our OPEX. But of course, it all represents more capex. Our robotic automated line for assembling the body structures of Gravity is a huge investment. And also, we've invested in what I think is the most advanced electric powertrain plant in the world. We had that just up the road, a few miles away from our main plants, running at a relatively modest volume. We've now brought that under the same roof, as well as logistics. So these are significant investments for the long term that we've made and continue to make, because Lucid is a long-term investment play. That's what we're about, not about a short-term quick win. You've only got to tour our plant. And then if you look what we're doing in Saudi Arabia, that's a very significant. So absolutely, we will need to have further round of investments in the future in order to realize this very bold long-term vision.
Makes a lot of sense. We have a few minutes left for any questions in the room, if there are any. Just raise your hand and we'll bring a mic.
How you doing? Can you talk about some of the key steps between here and Gravity launch? Clearly, this is not a simple thing, but you've also been working at it for a while. You've launched the Lucid now. Just talk about what are the key gates that you need to kind of get through between here and there to launch on time. Thanks.
So the question is, what are the key steps to Gravity launch? So I would ask all of you to follow the Road to Gravity set of videos that we're posting on social media on almost a weekly basis, and putting on our website, where you can follow the course of Gravity's readiness for production. And there are 3 key pillars to getting Gravity into production. There's getting the product right, getting the factory ready, and getting the supply base right around the world spooled up. We have several hundred suppliers, several thousand parts that we have to have the right quality at the right time. So right now, we've just completed our build of about 80 beta prototypes, and we're in the thick of the testing of those. We've had some very successful crash tests of betas, but those don't count for homologation. You have to test pre-production vehicles for that. Right now, we've got the robotic line in the factory fully assembled. And the robots are training. They're making the initial movements to rivet sheets of aluminum together. We're feeding some of the initial sheets of aluminum and fine-tuning the positions of those robots. Our paint shop is almost there. The spray booths I visited just 2 weeks ago, we were spraying gravities, albeit prototypes, very successfully. Some of the paths for the sealant are still to be fine-tuned. Our general assembly line is actually pretty well operational in readiness for gravity, and we're going to be building our first gravity battery packs somewhere around this week for pre-production. So the factory is getting ready for pre-production, and we plan to build our very first pre-production body shells later this month, the next few weeks actually. So the pre-production phase will take us through the summer, and those cars will be used for crash testing for homologation and for EPA testing to get the range, and also for training of all the associates, our brilliant associates, the team in Arizona who are going to build the cars with a huge dose of Arizona pride, I must say, so that they can dial in their quality and the fit and finish of these vehicles. And so it's scheduled to roll off the production line late this year. And I'm really excited because I think that it's going to be a seminal product. There's nothing close to it. We're targeting around 440 miles range, 7-seat, 3-row SUV, and it drives like a sports car. You can drive this thing really fast. It's a real Lamborghini Urus killer. I exaggerate not.
Yeah. Congrats on the 5 miles per kilowatt hour achievement. My question is on your ability to continue to improve miles per kilowatt hour, decrease battery size. What's it going to take for you to get to your goal of 6, do you think? Is it going to be a mix of weight saving from smaller and smaller batteries, or battery chemistry improvements, or powertrain efficiency? How do you get to that 6?
Yeah, it's a combination of all those things. We've got some new motor control switching technology, which we're going to over the air to the whole fleet very soon. So we've got a software OTA-able advance in motor control. We've got some very exciting advancements in electromagnetism in the motor, because what you're chasing is minimizing heat, minimizing the number of electrons that from the battery are wasted in generating heat. You want all the electrons to turn the wheels. That's what it's all about. So it's every step in that journey. We've gone to ultra high voltage with the highest voltage car in the world, 924 volts. I'd like to go more like 1,000 volts, because each of these tiny incremental steps takes its place. I think advances in tire technology are key. Even wheel bearing type and wheel bearing choice has a huge impact upon getting to that 6. So, but there are trades there in terms of the steering feel back with the different wheel bearing types. So all of these attributes combined, but remember, we're achieving 5 with a relatively large, luxurious car, a Lucid Air. Imagine if I said to you, I've just broken the world record for gas mileage. Oh, by the way, it's with an S-Class Mercedes. Because that's what I've just done. If I can get 5 today with a Lucid Air, maybe we're really close to 6 with something like a Volkswagen Golf type vehicle today. And my science team, we've commissioned and I've just approved the program to get us to 6. And I'm going to be releasing information on mission, that vision, later this summer.
Thank you, Peter, for very insightful explanations, including the technology. Two questions. How will you ensure to maintain the innovation advantage as your competitors, and you show two of them in a sanitized manner, are truly also in a catch-up mode? They're working on the same issues, whether it's the battery pack density, next generation of power electronics, inverters, etc. And then number two, consumers buy not only on the classic electric vehicle features. There are other aspects why consumers in the luxury domain are indeed deciding for a vehicle of one competitor versus the other. So brand, design, and congrats, the Lucid Air is a fantastic vehicle. So no question. Thank you.
So I think there was a historical analogy to your first question about catching up. When I joined Tesla in 2000, and it was February 2009, as chief engineer on Model S, the company just wasn't taken seriously at all. When I left in January 2012, the narrative had switched to the advantage at Tesla was temporary. Just wait till the Germans come. The advantage will be wiped out. And that hasn't been the case. We're 12 years on now, and the Germans haven't. They've actually there's been singular failure in catching Tesla. And why is that? And how did Lucid get into this position? How were we able to leapfrog not just everybody else, the Germans? And we're about 3 or 4 years ahead of Tesla right now on this. If you extrapolate where Tesla is, Tesla's not even close to us. And believe you me, they're trying like crazy. I know they're trying like crazy to do this. We are significantly ahead. It's all about handpicking the most brilliant team, motivating them, getting them totally geared up that this is the mission, the sense of mission, from the very top of the company. And Lucid is not distracted. I think Tesla's distracted right now. And I think this is the difference. I think there are many distractions there with social media and the likes. And Lucid has laser focus. We've taken the mental and we're leading the technology. This is something no one else has done. And while I'm in this position, we'll keep driving ahead. We'll get to 6 before everyone else. I'm very confident. And then brand. I think the product defines brand. You know, we outsell the mighty Porsche Taycan this Q1. Why is it the mighty Porsche? Because they built their brand on technical innovation and excellence. You go back to Le Mans wins with the 917 in the Piech era. What drove that? Piech was an engineer who drove that company and that brand. We're going to do the same.
Great. I think we're right out of time. So Peter, thank you so much for your time and insights today.
Thank you. Thanks.
Okay. I guess they're not going to do an outro or something like that, but yeah, no. So his initial speech, yeah, kind of the boring aspect, but it's the Q&A that really hit home. So good update on many different things, one of which is gravity. Second is innovation on the technology. He did give another update. It might be me speculating a little bit too much here, but he said he wants to do 1 million vehicles by 2030. So if you think about it, right now, AMP1 is at phase 2. So that's producing 90,000 vehicles a year in theory. Phase 3 should be done in the next, I think, 2.5 years, and that should boost it up to, I think, is 150, similar to AMP2, which is going to be 150. Logically, you guys don't have to be mathematicians to add it all up. That doesn't equate to 1 million. So that does mean that they're going to be expanding. And so maybe the next logical actual facility would be in China or Asia, or maybe they're going to do one in Europe, but in order for them to hit their target, they need to expand. And you can't just pop up a facility overnight. You need to start breaking ground in the next year in order to start for that 2030. So honestly, yeah, there's going to be some pretty big things coming. So he mentioned about the gravity. They've produced 80 prototypes so far. The robotic line is fully assembled and is being trained. Paint shop's almost there. Sealant needs to be fine-tuned. They're starting to build the first gravity packs this week. Homologation will be obtained through crash testing and whatever else by the end of the summer. And they're still on target for production at the late this year. So honestly, I liked it. This was a good thing. Hopefully tomorrow's one is going to be equally as good. So in case you do not know, they have this one. So the Evercore ISI Global Clean Energy and Transitions Summit. So this one's more of an early one. I believe it's 9 a.m. So that's going to be 8 a.m. Central for those of you that are kind of in the same time zone as myself. I'm going to be live streaming this as well. So yeah, stay tuned. It'll be a fun show. Hopefully this one they talk on, or Peter talks on ESS, but yeah, generally I liked the Q&A. It was good. Market didn't really like it. So when he first announced, actually on a side note, he actually did mention that there was the multiple OEMs. So that's still on the table. So that hasn't diminished since their last earnings. One thing that I wanted to, I kind of lost my train of thought. The market. I noticed that as soon as he mentioned about the big update for the technology, the market actually sold off. I think the market was anticipating for them to kind of talk on how they are going to be connected with that whole /Hyundai deal. So again, I think the market wants something and it wants to be a part of this. And so hopefully they do bring that up tomorrow, unless they're just waiting for their own thing. But logically, Lucid is going to be a part of this because Sear doesn't have any real technology, right? So how can they be supplying to Hyundai advanced electric vehicle drive, like their drive system? It doesn't make sense. So yeah, I think there is going to be that partnership. Now clearly it's going to be integrated with Sear that we now know. And so that means also Foxconn is going to be somehow in the mix. So yeah, honestly, there's a lot of different variables that this could really work out. And I think Lucid could really be benefiting from this deal through Hyundai with exchange maybe of, I don't know, Hyundai has the ability to ramp up. That's one thing that they have. And so that's one thing that Lucid needs. I don't know. Pretty good stuff in my opinion. What's your guys' thoughts? Rivian's CFO speaks in 30 minutes before the market close. At that same conference? Let's take a look. Let's pull up Rivian. Yeah, they are participating in, yeah, you are right. At 3:25, so in 5 minutes. Is that right? Yeah, 3:25 Eastern. Well, not to transition, I get this is a Lucid one, but if you guys want, we can definitely join. If you guys want, I'll have it up and I'll record it, and if you guys want to stick around for the Rivian one, we'll see what good 𝗪𝗓𝗓, sorry if I butchered your name. Nice catch on the Rivian CFO. But yeah, hopefully tomorrow's one is equally as good, because I really liked, I made a lot of good notes. And honestly, I'm surprised the stock price hasn't recovered. Like, he basically said, like, gravity is there, and it's like, there's nothing, from my interpretation, it sounds like they're still trying to fine tune some stuff, but for the most part, he didn't give any red flag saying, hey, you know what, it's not going to be there, or I got no impression that he's going to push that back. So yeah, there's that, expansion plans, just they're also starting he just approved a program which is going to be starting in the next couple of weeks for them to get to that 6 to get to 6 instead of 5. So they're still innovating. Although this is my pet peeve with Lucid, is that, like, why don't they do a lot more news? Like they're very active on social media, sometimes pointless posts, but I would really rather them just put out news, because I guess I can talk for a couple more minutes before this actually joins. The only bad thing, this doesn't have any background music, so I don't know when they're going to be joining. But anyways, what happens is in the market so far in 2024, a big chunk of volume is done by algorithmic trading. So algorithms are scanning the market, scanning news just to interpret everything, whether it's positive, negative, and then they adjust accordingly. When it comes down to Lucid, if they're not putting out news, those algorithms can't pick up on that positive vibe, if that makes sense. And this is why often enough Lucid does lag. So it'd be really good if Lucid put out some news, because even if you look at, for instance, Rivian, like they put out a substantially higher amount of news than Lucid, although not all of it is, a lot of it is fluff, but companies need that fluff to kind of, in my opinion now in this day and age, to trick the algorithms. And I think just on a comparison basis, Rivian is doing a lot better than Lucid based on the price point wise, or price action, I guess. So yeah, pretty good stuff. Yeah, that's on. I'll make sure I close the Lucid one. So in case you are just joining, you missed some pretty good stuff from the Lucid one. We're going to be jumping over to Rivian right now. So I think it's supposed to be starting at, was it 25? Okay, so in exactly 1 minute. The only bad thing, I don't hear any hold music. Nothing. Okay, so I hear something, and that's not my computer. That's not my computer making those chimes. I've noticed when they were talking during their conference, that kept going. So I think whoever's in charge of doing this right now, like the slides or something, that's them. It's definitely not me. I have nothing going on right now. Just on a side note, in case you guys think that's me. Mohammed, I did buy another 200 shares this morning. I think with all three positions, I have around 6,000 now. I did reduce it after the
Joining us for this closing discussion for the day one of our conference, together with Rivian. I'm extremely excited. I'm Emmanuel Rosner. I'm the lead U.S. autos analyst here at Deutsche Bank, and I'm extremely excited to be joined by Claire, who's the CFO of Rivian. Rivian is an electric vehicle manufacturer specializing in light and commercial vehicle production, software, and service solutions for consumer and fleet customers. The company is targeting to produce 57,000 units this year. It recently unveiled its R2 and R3 vehicle, with the R2 slated for launch in the first half of 2026. And just last week, Rivian disclosed their refreshed, redesigned R1 vehicles as well. So extremely excited for you to be here today to discuss all these dynamics going on. Thanks for being here.
Thanks for having me.
So maybe to start, let's talk about these recent developments at Rivian. You unveiled and started selling the second generation of your R1 vehicles late last week, incorporating some new technology and features, but also designed for lower cost of production and better manufacturing efficiency. Can you talk to us about the main changes in the new vehicles, what customer reception has been so far, even though it's only been, I guess, a few days, and whether you were able to liquidate inventories of the old model before June 6th when you unveiled these?
Sounds good. So last week was a really exciting week at Rivian to bring our Gen 2 product to market. From an investment conversation, we've talked a lot in the past about some of the cost down efforts that we have within the product. but we haven't talked a lot yet about all of the new features that some of these new technologies have enabled. And so now it was great to put our vehicles in the hands of many different elements of the broader media complex, from influencers to traditional media players, to experience the product for themselves. And I think that the reviews largely speak for themselves. We were really excited about what we heard back, which was our thesis going in, which is how do we significantly reduce the material cost of the product while also driving ease of manufacturability, but doing that in a way that the consumer walks away saying that this is an even better product as well. And we saw that truly in spades as we look at some of the media reactions to the product itself. Happy to go through some of the key changes that we made as well. First, we have introduced our own next generation in-house drive unit that is powering our tri-motor offering as well as our quad motor offering. And so if you thought the Gen 1 product was fast with 0 to 60 times of 3 seconds, our tri-motor now does 0 to 60 in 2.9 seconds, while also offering expanded range capabilities of up to 410 miles if you're driving in conserve mode. Equally, for the true enthusiast, our quad motor offering is 1,025 horsepower. So when you think about the performance of the product, the torque that is available within this product, it goes 0 to 60 in under 2.5 seconds. And we put a little bit of gamification into our software suite, such that you can go into Rivian launch mode, time yourself going 0 to 60 or going that quarter mile to truly test out the performance and utility of this next generation product. We've also offered new, more premium trims with the tri-motor and quad motor offerings. So really excited about what's coming next with some new colorways, new incremental Rivian music packages with Dolby Atmos that truly creates an environment and experience as if you're in an IMAX movie in your own vehicle. So really, really compelling offering as we think about some of the premium end of the spectrum that comes with tri-motor and quad motors. One of the other significant changes that we made to the product that we've talked a bit about in the past is the move to a zonal network architecture. So we went from our first generation product that had 17 ECUs powering the vehicle, and we've reduced that count down to 7. That's also enabled us to reduce our wire harness length by over 1.6 miles of harness of wiring that reduces 44 pounds of mass out of the vehicle. So again, back to the core theme around cost efficiency and design for manufacturability. It's a great example of our engineering teams at work that are continuing to innovate as we move from controllers that controlled a specific element of the vehicle previously. So you could think about our ECU controlling the climate controls of the vehicle, for example, to now truly having 3 zonal ECUs that are controlling the right-hand side of the vehicle or the left-hand side of the vehicle. So this lift sits on the shoulders of our software team that are now mapping all of the core systems to these higher power ECUs that are now in place within the vehicles themselves. One of the additional introductions we had was the launch of the Rivian Autonomous platform as well. Again, we've increased the compute 10x in the vehicle. We've introduced all new, we have 11 new cameras that we've designed in-house, 5 radars that allows Rivian to see 10 seconds ahead of you as you're driving or traversing down the highway. So from a consumer standpoint, you'll see the clarity of imagery in terms of the cameras that's also enabled by just the speed and processing power of these new NVIDIA, Drive Orin chips that are powering this next generation autonomy stack for us as well.
So can you quantify for us the cost or margin benefits from these new R1s? How much of the improvement has to do with better supplier conditions versus cheaper new components or technology?
As we think about the overall efficiencies, this shutdown that we went through in April to introduce new technologies was also an opportunity for us to group a number of part changes as well, so that we had a significant change in our bill of materials all at once. And this is truly what delivers Rivian, on its path to positive gross profit in Q4. And we've talked a bit in the past about the material cost being the largest driver in the walk to positive gross profit for the business. As we think about the breaking points between drivers of true just pure engineering changes relative to some of the supplier negotiations, I would say it's sort of 60, 70, 30, 30, 40, as we think about supplier negotiations relative to engineering design changes.
And a few months ago, you also introduced your future R2 and R3 more affordable vehicles. How much parts and technology commonality will there be between these and the new R1?
The key systems that will power R1 that will ultimately find their way into R2 are centered around the electronic architecture in the product itself. And so we often talk about the move from our first generation R1 to our second generation product as a bigger step relative to the step that we'll now take from our Gen 2 product to R2. So in a lot of instances, as we think about the ECUs, as we think about the software stack, as we think about the autonomy that will power R2, there's a lot of shared commonality between what just went into the Gen 2 product itself that then will be levered as we bring R2 to market. And in certain other instances, we'll have more of a next evolution of drive unit that will go into R2 that's continuing to build on the core learnings that we've gone through as we've now brought to market 2 fully in-house drive units and are working towards a third one for R2.
Let's shift a little bit about, let's talk about the environment and I guess the demand backdrop. All this work you're doing is in the middle of a general backdrop of US demand for EVs that is maybe slowing down. We're seeing that in price cuts, rental car fleets, EV volume goals being lowered across the board by all sorts of automaker. Is demand for Rivian products being impacted? And if so, how do you address the current environment?
We're still pretty early on our broader roadmap as it pertains to building out many of our go-to-market capabilities and functionality. Some of that's evidenced by lower levels of brand awareness for our product. So as we sit here today, the R1 is the best-selling EV in the market, over $70,000. Rivian itself had top 5 EV share in Q1 of this year. And we have the opportunity, as we think about the launch of R2, to take all of the performance, capability and attributes of that flagship product and translate it to a much larger, accessible consumer base as we continue on forward down the path. And so for us, it's continuing to drive awareness. Today, we're utilizing our physical infrastructure, both from our service network. So we have about 57 service centers across North America that we execute test drives out of. We've been building more in-house sales capabilities within that service network to further complement the physical or retail spaces program that we have as well, to continue to make sure that more customers can experience the product for themselves, because driving is the best way to sell a Rivian. The more consumers that are aware of what we've built and have actually gotten behind the wheel, the better. We've had some cars out here today, so hopefully many of you guys have had a chance to test drive for yourself.
Now you guided to 57,000 units of production this year. What have you assumed about demand trajectory for your product in order to absorb this production? And are you worried at all about the pricing environment for EVs?
As we think about the production cadence from a delivery standpoint, our guidance for the year has been that deliveries will increase in the low single-digit area for both the consumer product as well as for the commercial vans. I think we've seen throughout the course of 2024 a lot of excitement around Rivian that stemmed from both the March reveal of the R2 and R3 and showcasing what's coming next. That was a great brand building moment for our company. Equally, as we think about this next gen offering and launch this past week and getting more awareness for Rivian and what's coming next, that gives us confidence in the building blocks that we're generating from a demand generation standpoint as we think about more test drives, more interactions with consumers and spreading word of mouth as well.
How's demand for the standard pack R1, which you started producing even before, I think or at least offering before the shutdown, and now sort of started producing maybe with the LFP battery? Can you talk about the trim mix within R1 in terms of your production or demand?
As we think about the standard range pack, it's really an important entry price point for us. So, for example, our standard range R1T starts at $69,900. And so for the consumer that wants to experience the brand, we've also seen it be a great tool to bring more consumers into our website environment, into the R1 shop to check what inventory may be available for purchase as well. But it's not as if every consumer that may have been drawn to the site for the standard pack ends up with that standard pack, as evidenced by some of our commentary on our Q4 earnings call, where we actually saw an uptick in order rates in Q4 of our quad motor offering when we launched the standard pack. But again, it was that curiosity and understanding the accessibility of the product on the lower end that drew more awareness for what we were providing.
Now, looking ahead, you've said that after this recent factory upgrade, available capacity for R1 will be 56,000 units on 2 shifts. Before, obviously, any shutdowns, et cetera. If I add a stable number of EDVs, it doesn't necessarily suggest much volume growth in 2025 until R2 is launched, sort of like the following year. First of all, is this the right understanding that 2025 is sort of like stable-ish type of volume rather than real growth? And if so, is it a function of demand for the R1?
So part of the efficiency that we went through in our retooling of our normal facility was to increase the line rate of our R1 line by 30%. And so prior to the shutdown, on 3 shifts of production, we could build 65,000 units in an annualized basis. Now with just 2 shifts of production, as you mentioned, Emmanuel, we can build 56,000 units. And so we're driving significant operational efficiency into the production. And we're continuing to watch the broader market backdrop and competitive landscape as we think about what would the signals need to be for us to add incremental capacity prior to the launch of R2 in the first half of 2026, which will come online within our normal facility as well.
In terms of the EDV program, can you elaborate on the current capacity for it? And do you expect to accelerate volume in the out years? Or will Amazon take steady deliveries until all orders are satisfied?
On the commercial van side, our capacity within our normal plant is 65,000 units of commercial van capacity. When we bring R2 into normal, the nameplate capacity of the normal plant will be 215,000 units of capacity, and we'll have a maximum capacity of 155,000 units of R2. And so, for example, if you built 155,000 units of R2, you would have 60,000 units remaining to split between R1 and our commercial van program as a whole. And so as we look at the longer term of normal and its output, we have a lot of operational flexibility to flex between production volumes within each of the lines for, R1, R2, and the commercial vans themselves, such that we can orient the plant towards a maximum gross profit contribution for Rivian that allows us to, increase our cash flow generation out of the Normal site as a whole. And today we're just building on a single shift in Normal for our commercial vans and not even a full shift at that. We've talked a lot in the past about the longer term sales cycle required for the commercial van business itself. So we're in market speaking to a number of large B2B enterprise players about the capabilities, the total cost of ownership advantages that our van can provide. And we truly believe it is, best in class in terms of performance within the commercial van space in the market itself. But it will take us some time to build up more of the longer term demand trajectory, beyond the Amazon relationship that we have as well.
Let's pivot a little bit about pricing and margins. As we stand here mid-year through 2024, can you talk about your latest thinking on margin trajectory this year? I think you've said Q2 will be messy. Why is that? And are you on track for gross margin profitability by the end of this year?
So as we think about some of the dynamics of Q2 margin, Q2, we've used the word messy in the past because it will be our lowest production volume quarter as a whole. We were down for the vast majority of April with the plant retooling, and then have been, in the ramp phase of building back up production volumes in the facility. Beyond that, what we're selling in Q2 is really Gen 1 inventory. And so as we think about, at what point do we start to get into the sales of more of the Gen 2 product, it's not really until, Q3 and Q4, where it's much more, material from an overall contribution standpoint as a whole. And then as we think about the commentary that we've made in the past on our confidence roadmap to Q4 gross profit positive, as we sit here today, we've had, a great opportunity to demonstrate the operational capabilities of our manufacturing, engineering, and, ops and facilities teams in a very compressed timeframe of making significant changes and improvements in our production facility that's now, ramping and scaling of high quality production. We've also now seen, the launch and start of production of the product, different variants that are coming down our production line, in which we have, contracts in place for the supplier, renegotiated supply contracts for what we're building in the plant itself, and, great receptivity from the broader media community as well for what's coming next.
So based on what you've seen post retooling and re-rate, the input cost now from your new supplier relationship, the rate of the factory, some of the cheaper components that this is what gives you confidence in getting to that profitability by the end of the year?
That's right.
How should we think about the trajectory of profitability as we move forward and into next year? Is next year a year with more volume, more cost improvement? Will there be smaller or larger investments since you will be getting closer to these, R2, type of launch? I guess, what happens beyond this sort of like near-term milestone of, gross margin positive?
Sure. It certainly doesn't stop there as we think about, reaching gross profit positive in Q4 of this year. And there's certainly a long-range plan that drives Rivian towards its longer-term target margins of 25%. As we think about, 2025 in particular, there will be some, ongoing commodity cost tailwinds that will continue to pull through our material costs within the business. So that will be a contributor for us. One of the other dynamics that we'll see in 25 is from a mix standpoint. So in 24, as we're thinking about the ramp up, we started with standard range dual motor vehicles, and we'll be ramping up towards the back half of this year with our tri-motor configuration. But quads aren't going to come into play until 25. So from the full suite of offerings, we won't have that until the 2025 period. That'll be sort of another driver of the business as we have, the current cost structure for the full year of 2025 versus really, just the second half of 2024.
But then is there an increase in investment as you get closer to this R2?
So the guidance we've had from a capex vantage point is that we'll spend roughly 1.5 billion of capex. So it'll be slightly higher than the 1.2 guidance that we've had for this year.
Got it. You were talking about these raw materials, costs coming down. Can you update us on the input cost, deflation or that you're observing? We obviously been, hearing about these battery prices coming down as a result of, the demand environment and the supply environment. But what are you specifically seeing, and what would be the timing of you seeing those benefits?
Or there's a lag effect in terms of the market spot prices coming down, and then when do we actually realize that from a delivered production perspective. So for us, we'll see more of that begin to take hold in the second half of this year. And then, as I mentioned, we'll see more of it, fully take effect in 2025.
And then would you expect the most recent round of China tariffs to impact your cost at all? I'm thinking, for example, of potential impact on the economics or your LFP battery pack.
Today, we use LFP for both our commercial van program as well as our standard range pack in the R1 product itself. The current dynamics that have been noted in the press around some of the potential changes are still sort of too early. They're in a comment period, so it's hard for me to truly comment on that question in particular, and knowing that it's still a little bit in the works.
But it is imported from China currently, the LFP pack?
Yeah.
Okay. Let's talk about R2. Now that you've revealed the R2 vehicle, are you on track for production and deliveries in early 2026? And since you're going to use the normal Illinois plant, is there potential for a faster timeline on the ramp in production?
As you can imagine, our goal is to move as quickly as we possibly can to bring R2 to market. But it's not just Rivian. We need to mobilize a supply base as part of that ramp. We need to integrate a number of new pieces of equipment within our facility. And so I would characterize the first half of 2026 timing as being appropriate for our ramp timeline as a whole. But know that we're doing everything that we can within our capacity to continue to push our teams to pull time out as well.
So what is the work that you need to execute on to get ready for R2?
So today the work is centered around sourcing opportunities, so securing supply agreements and contracts for each of the respective parts of the product itself, continuing to source all of the equipment that will go into our production facility, and in many cases, contracting some of the work to increase line rates as we think about the investments that we'll be making in our paint shop, for example. That'll be one of the key investments to unlock the move from 150,000 units of capacity today up to the 215,000 mark.
Where will R2 be in terms of price point, and what's the addressable market? And then where do you see most of the competition coming from? And is there a risk that it could be much more at that price point by then?
So the starting price point for R2 is $45,000. We see R2 really stretching up to, in and around the highest and most premium, configurations of R2, sort of ending before R1 begins. as you think about the relative, pricing architecture of the products themselves. And I think that as we think about the addressable market for R2, for us, we think about it not just in the lens of R2, we also think it in the lens of what we call our mid-size platform that will house not just the R2 products, but also R3. We design it for global markets so that we're, in a position to not just sell in North America, but expand, production to Europe over the longer term to build, our brand globally. And as we think about the broader competitive set, I think one comment I'd make is that we are always looking to drive innovation within the market. And so if you looked at, our R1 products were already, award-winning, fantastic products in terms of performance and capability and utility, and we just made them even better. And so it's not as if we necessarily have to see competition to continue to push ourselves to drive, innovation across the board. It's something that we're, naturally doing day in and day out as we say, how can we make things, better and cost less? Because our core objective is to ensure we're driving, widespread EV adoption across the board, which is going to naturally have to come, hand in hand with much lower, cost vehicles over the longer term.
How are you thinking about profitability of the R2 vehicle, and what are the levers to reduce the cost of goods sold enough to make it profitable?
For R2, we believe the R2 product can really hit Rivian's, internal targets as it pertains to its vehicle margin profile, which from a vehicle standpoint is approximately 20% margin target over the longer term. I think one of the key changes that we've seen, which has been really encouraging for us, is as we've gone to market to source for R2, we're seeing Rivian's position in the market dramatically different than where we were when we were in market, sourcing R1, or even when we were in market resourcing and, going through the supplier cost down effort as part of our Gen 2 launch as well. So we're seeing that continued progression. And I would say that there's, increasing confidence in how our products are resonating and the market share we've been able to achieve with a far more premium product that gives people confidence as they think about their desire to strategically partner with Rivian as we open up a much more, broad addressable price point with R2 and R3 in the future.
So is it mainly about sourcing?
Sourcing is a key component of it. I would say that it's, the combination of sourcing and then the continued advancements in design for manufacturability as well, that are certainly key drivers of the efficiency we need to deliver for R2 to be, profitable much more quickly than we saw with our R1 product as well.
I think you were saying invested in a couple of weeks in Normal. You've already shown us the R1 redesign, the R2, the R3, the R3X. What can we expect at Investor Day?
Well, one of the opportunities is to go and drive and experience the Gen 2 product for yourself. As you think about, outside of our Normal facility, we have a test track and off-road course there. And so it really allows, people to put the vehicles, to the test to see the performance for themselves. So that's a key unlock and opportunity. We're also focused on, how do we continue to build confidence with the investor community on our financial trajectory as we think about, first our path to positive gross profit and over the longer term, to positive EBITDA and positive free cash flow as well. So certainly focused on, making sure we're sharing the confidence we have in our near and long-term roadmap as a whole.
And then just maybe a couple of questions on capital and capital allocation. What's your latest thinking about timing of the Georgia factory, and when would spending be needed?
We haven't given specifics around timing for investment for Georgia. We'll continue to look at the broader capital market as we think about the right timing to pull the Georgia facility into the longer range production plan, but remain very committed to the opportunity to build R2 and R3 in Georgia.
What's your estimated runway with the current cash position? When would you need to raise more capital, and what options are you considering?
What we've said publicly in the past is that we have cash on hand to fund operations through the launch of R2. We'll continue to be opportunistic as we assess the broader end capital markets about funding options, and sort of the Georgia timing relates to what that roadmap looks like for the funding requirements for the business as we think about the flexibility we have to build the production out in a more sequential basis versus building out Georgia in a faster related timeline.
So through first half of 2026, there would be enough cash, but you would be opportunistic before that. I think we have a couple of minutes for any questions in the room, if there are any. Otherwise, I wanted to ask you about software and services. It was a big part of the Rivian story during the IPO process. I saw the refreshed R1s offer a subscription to a premium connectivity package. Can you talk about the size of the opportunity?
Software and related services is a significant long-term opportunity for the business itself. So what you're seeing with our Gen 2 launch is the launch of our Connect Plus. So that is premium-related connectivity for your product that enables wireless hotspots in the vehicle, access to all of the great infotainment features. So we just recently launched Google Cast. So if you're waiting at a charging site, you can cast your Disney Plus or Netflix onto your screen and watch with your family or kids in that capacity. So we're excited about the continued offering that we're bringing to market there. And then one of the other significant unlocks for us is with the launch of our Rivian Autonomy platform, we'll now be unlocking more paid features as well as we think about our ADAS roadmap, which is a key driver for the long-term recurring margin opportunity that we see embedded within our software roadmap.
Great. Before formally wrap it up, we do have a question, please.
Where the relationship with Amazon stands and kind of the commercial business overall. My sense is Amazon might have kind of delivered or delayed taking some of their deliveries. What's their commitment to continuing to buy vehicles on the Rivian platform? How long does that carry you? And any sense of when we might hear about another commercial customer coming on with Rivian? Thank you. And then how important is that to the business model?
As we think about the commercial business and relationship with Amazon, we have maintained a really strong relationship with Amazon as a whole. Amazon's our largest shareholder and partner, and obviously a great B2B customer, given that they've been fastest to transition their fleet to electric vehicles as well. As I mentioned in Emmanuel's question previously, the longer term sales roadmap does take some time as we think about building relationships with other enterprise level consumers of our product and building out the longer term pipeline to much larger scale orders within the business. We still have a lot of conviction around the opportunity at hand in the commercial space, and as I mentioned, believe that we truly have a differentiated and outstanding product in the market that can capture meaningful long-term share. The more that we produce, the more fixed cost leverage that we have within our normal facilities. So that certainly becomes a tailwind for us as we produce incremental commercial volumes over the longer term.
Before we wrap it up, I was tasked to formally remind everybody and invite you to our reception on the rooftop of a Deutsche Bank Center, which is on the way out here to the right. Beautiful rooftop overlooking Central Park with most of the global autos team here at DB. So Claire, thank you so much for your time and insight. And thank you everybody for joining.
Cool. Good stuff. I wish I could join that rooftop party too. But yeah, no, I think comparing the two, I think there's a lot more to be had from the Lucid one. Rivian seemed to just more reiterate. He kind of had the same common questions, just overlap them. Maybe didn't anticipate people to be joining Lucid and Rivian. But you know what? Still good stuff. For those of you that are still awake, I'm going to be doing a summary video on Lucid. Not necessarily Rivian. I'll just kind of rebadge it and post it out there just so Rivian people can just listen to that solely. But even though the price isn't really, actually the market just closed, but even though the price didn't really work out how I would have anticipated, still, I think it had a low of $2.65 today. So in theory, it is below that 50-day moving average, so not necessarily the best, but it is what it is. So let me know your thoughts. Don't forget to hit that thumbs up. Appreciate all of you guys joining in for what I see as pretty good stuff. So yeah, you guys have a good rest of the night. Stay tuned for tomorrow. It's a very early one. So tomorrow it is at 8 a.m. Central, 9 a.m. Eastern. So I'll be live streaming that. Most likely that one I would assume is correlated to ESS based on the title. So Global Clean Energy and Transition Summit. So I feel like Peter would be able to talk on ESS, I assume, or maybe technology, innovation, stuff like that. But honestly, there's no agenda for any of these, so I have absolutely no clue what they will be talking on. I can only assume based on the title. So without further ado, you guys have a